Go live. What's going on, my people? Hola, mi gente. Can you comment down below if you guys can hear me, and then we'll get this show on the road. 4 likes. Smash that like button as well to help with the YouTube algorithm. We're going to go over on this video. We are going to go over what I believe to be the top stocks. We're going to talk about the stock market a little bit, what to expect with the upcoming week. It should be a week packed with news. So this is gonna be an interesting week. What's up, Jose? All good. What's up? What is up, everybody? What's up? What's up? What's up? You guys ready for a good week? Hey, the Stock Explorer. What's up? This is exciting. It's my first time doing the live. There's gonna be a delay with my video because I don't have the Elgato cam link. It's like $100 something. I ordered it. It should be coming in the next couple of days. All right, so first and foremost, let's get this show on the road. Today we had an epic event with one of the stocks that we've been talking about for some time on the Discord. I uploaded a video like last November on this stock. I have leaps on Virgin Galactic, and we'll see what happens with the stock on Monday. But today they had their test flight. All was good. It was successful. Richard Branson went to space and came back as a man, a whole man, did not blow up or anything like that. So everything was good. Virgin Galactic tomorrow, Monday, let's see what happens. What I think is going to happen is going to shoot up in the pre-market. When the market opens, people are going to start taking some profits. But I think the retail investor and traders are going to jump into this thing and it's going to move higher. Now, we talked about this in the video that I was doing. I covered the live stream. We had all of New Mexico join in. Happy Sunday. Hope you had a great weekend. Thanks, David. I had a great weekend. I hope you had a great weekend as well. So we watched that live event. It was stellar. Amazing. A moment. It's in the history books. Let's just put it that way. So let's get back to the chart for Virgin Galactic. What we discussed in that live chat where we had all of New Mexico chime in, we said that this was somewhat of a cup and handle. And what would a price target be off of a cup and handle? And basically, when you have your handle formation formed, your price target, if this is a cup and handle, which would break out, which I think is going to happen pre-market, your price target is going to be the price difference between the peak and the bottom of the handle. In this situation, it's $62 for the top of the peak, $62.80, and the handle was around $42. So $62.42, the difference is $20 there. So if this formation breaks out, the traditional price target would be $20 over the first peak. So we're at $62.80. You add 20 to that. So we're at $82.80, $83, $82 would be your price target. You could say 80 just to be conservative. Now this is just off of the technicals, and we did this for AMC and I ended up selling too early. AMC became a monster. Can Virgin Galactic become a monster as well? Will Virgin Galactic end up going to the moon? There's a chance that it will. So, you know, the way that I like to play this in any kind of volatile speculative play is I like to lock in profits and keep some out there and just play with house money. So I don't get hurt if it dips, and if it continues to move up, I continue to make money. So just reduce your risk, take some off the table, lock in profits, and try to just play with house money at that point. That's the best way to do it. It's stress-free and you can still make money. So that's what I like to do in these kinds of situations. But I think Virgin Galactic can go past $82, but that would be the price target. Moving on next, let me get a drink real quick. And you guys got any stocks? Put them in the chat. I can't guarantee that I'll get to them. I have a list here and I don't want to make this video too long, but share your due diligence with each other. And if you're not already part of the community, if you're not in that Discord server, then I highly recommend that you join, because that's where we talk stocks every single day. That's where I get some of my ideas from. I share my ideas with the other members and we all learn together. That's the whole purpose of this. So moving on, the next thing that we want to take a look at, which is super important, is the 10-year Treasury Index. This is the index of the yield of the 10-year. And right now, as you can see by this chart, We've fallen off a cliff, and the stock market right now is sketchy because of this. Alibaba and MITQ. I'll look at those later. The stock market right now has me uncomfortable. I don't know what's going to happen. It could sell off. If the 10-year does not rebound and does not move higher, and we dip below 1.25%. The reason why I say 1.25% is because of 200-day moving average, and we bounce off of that. So it looks like we might be rebounding, but it's still too early to tell. But my thesis on this is that the 10-year is going to rebound. We're going to have good economic data, and the rotation out of value, out of reopening, and into large cap tech and growth, that's going to flip again, and we are going to see money back into reopening and value and cyclical trades. The reason why I believe that to be the case is because that's where earnings are going to be strong. And those companies with earnings stronger, the valuation is going to drop. So the only way to keep the same valuation, a fair valuation, is for the share price to increase. So if we have good earnings in those stocks, they should do well. But you need to keep an eye out on the 10-year because this will control the market. The bond market controls the stock market. It's not the other way around. And bonds are extremely boring. A lot of investors do not care about bonds. They do not watch it. And it's like investing in the dark if you don't know what's happening with the bond markets because they will control the stock market. So long story short, the 10-year needs to hold above 1.25%. If it doesn't, there will be pain. If it drops below 1%, I think there's going to be a ginormous crash in the stock market. And I always like to have some kind of hedge in place. So you could be short the treasury bonds, or you can be short high yield corporate bonds, junk bonds, which is what I'm doing personally. I have puts on HYG just in case we get a shit show and something explodes in the market. I'm somewhat protected. Moving on from there, we have some data this week, and this is one reason why I say it's going to be a fun week on the economic calendar. And I know this stuff might be boring, but this is stuff that I look at when I look at trading in the stock market, because this stuff can move the market and you want to know what's going on. I don't want to be oblivious to this. I don't want to be a dumbass when it comes to the market and be like, oh, why is it falling? Is Powell speaking? Yeah, I don't want to be that guy. So yes, we got information coming out this week. On Tuesday, we're going to get CPI. So we're going to see what inflation's looking like. On Wednesday, we're going to get PPI, again, inflation. We're going to get jobless claims on Thursday, and we're going to get retail sales on Friday. So there's a lot of economic data that's coming out, and that could change the narrative, because right now the narrative is that the 10-year is dropping because the economy might not be as strong as people think. And I'm bullish on America. I think we're going to be strong. I think we're starting another economic cycle, which will be a strong one. So I'm optimistic, and I think the 10-year is going to rise, and then that's why the value trade is going to rise. Another thing to mention is back to the 10-year. If the 10-year increases, what stocks do well with a rising 10-year? Financial sectors, bank stocks do well because that's going to increase their revenue. So bank stocks is a sector that I am bullish on, and including on top of all of that, recently bank stocks passed the stress test. So damn, I've been not looking at the comments. Good stuff, pal. Damn right. 100%. Yeah, you know it. You get it all the time when the stock market drops. People are like, oh my God, why is it dropping? It's just know your shit, and you know why. Because they're freaking talking on the TV and people freak out. Back on topic. Bank stocks, 10-year increases, good for them, good for their revenue. Also, pass the stress test, they're increasing dividend yields and they're increasing share buybacks, which is good. They're not diluting the share. They're actually taking shares off of the market. So if you own shares, you are going to have a bigger piece of the pie. So your shares are going to be worth more. And the stock that I like in this sector, and I'm going to explain why, is Ally Financial. I don't know if you guys use this bank, but I personally use it. And why? It's because it's an online bank, and it's a great bank. The saving rates are going to be much more than Bank of America, Citigroup, you name it. Wells Fargo, all those traditional banks. This is going to blow it out of the water with savings. Also, you get free money for ATMs because they don't actually have a physical location and you can't actually go to a location and take money. They will reimburse you monthly for your ATMs. They also have investing in the stock market, and the value when it comes to price to book is good on Ally Financial. It's undervalued and it's a smaller market cap too. So this is something that I'm holding long term because as a bank, I think it's going to grow and I think it's going to take market share from other banks, and it will continue to move up and to the right, as you can see by this 1 year, 1 day chart. But we did have somewhat of a pullback, and I've been buying the dip here with Ally Financial because personally, traditional banks, what do they offer? They offer a ball and a chain. You go there, you have not ball and chain, a chain and a pen, my bad. They offer a pen and a chain. You go to the table, the pen is locked up. You can't even walk out with a pen. That's what they offer. This offers much better rates, and I think it's a good investment. Moving on to the price to book, if we take a look at the stock, this is all Thinkorswim, and I look at Ally, and I need to slow down and take a look at the chart. So if we take a look at Ally, right, and we look at this stuff, what's going on with it? Now, when you value bank stocks, the typical multiple that everybody looks at is price to book. This is a multiple, and right now they're trading, the current is 1.15, 1.1494. Now, what is the average price to book in the stock market for banks? And right now, as of the first quarter of 2021, the price to book is 1.28. So you consider all the factors that I listed beforehand on why I'm bullish on Ally as an investment, and then you take a look at the valuation from the price to book multiple, it's undervalued, and I like it. And bank stocks this week are going to have earnings. Ally's not reporting this week, but some other bank stocks, you got JP Morgan, Goldman Sachs, Bank of America, Wells Fargo, Citi. A lot of big banks are reporting this week. So it could be a volatile week for banks. And considering the drop in the sector, if earnings come back and they're good this week, then the whole sector is going to move up. A rising tide lifts all ships. Moving on to the next stock. And let me take a break here, get a drink. Let's take a look at the chat. Balls, baby. Big man certified. What's up, brother? I love you, man. You were a day one. I appreciate the support. You've been rocking with me since day one. You the man. Ally on the 20th. That is correct. Yeah. Moving on to stock number 2, and everything I have listed for you guys today is off this thesis that the 10-year is going to increase and we're going to see strong. We're going to see these companies, the value trade, perform extremely well. So the next stock that I have on the list is Uber. And right now you're looking at the 1 year, 1 day chart. And what happened? We had that rotation and it stopped. It dropped, it went from, $59 to $42 in a quick time. Big dip here. What did you do? Did you panic sell? Did you paper hand? Or were you big man certified and come in with your big dollars and buy the dip with your cojones? Did you do that? That's what I did, because this stock right here, I think has good potential long term. And considering where this stock opened up with the IPO right here at around $42, it traded lower. Market was weak. It did not open up higher off of the IPO. And where we're at right now, I mean, if you just consider a modest 10% gain on a company that is dominating their sector, had great growth in Uber Eats, that all of that got pushed forward because of the pandemic, so that business strengthened. You're looking at if you look at a 10-year gain off of just based off of this date, so we grow this 10% 1 year, 10% the next year, because we're basically 2 years out. You're looking at a price target of $60 for Uber, and we're trading at $49. And they dominate travel. Let's be honest. When's the last time you went into a taxi? Every time I go somewhere, whenever I fly, I use Uber. Whenever I'm drunk, I use Uber. I look at Uber and Lyft, and they're basically competitors. They're comparable, but Uber has exposure to Uber Eats and to some other stuff. So I like this company better than Lyft. Both of them I think are going to perform well, but I'm rocking Uber personally. So to get back to $60 would be nice gains, and that's just 10% gains over the last 2 years, compounded annually. But also, if we take a look at what the analysts are saying for this stock for Uber, they're saying they have a price target of $72.36, a high of 85, a low of 55. And whenever you look at price targets, it's important to see when they were reiterated, because if these price targets are old, then they're no longer valid. And we had some over the last 2 months. We had a 75, we had a 55. Alexander Potter is a bear when it comes to Uber, but at the time it was still 12% upside. This one was a big upside, 57% from when he initiated that price target. That's a big move up. Scott 65 and Patty Pudu $56. So long story short, I think Uber's gonna rock. Uber's gonna move up, and we're going to break all-time highs. We're gonna move beyond $64. I don't know when, but we're going to do it. This thing's moving higher, in my personal opinion. It's a good investment, and it's a great way to gain exposure to reopening and travel. The reason why I like Uber and not your cruise line stocks and your airline stocks is because cruise lines, if you take a look at the balance sheet, they took on a ton of debt to stay afloat, because those ships were just docked, and they weren't making any money. They were just bleeding cash, so they had to take on a bunch of debt just to stay afloat. And airlines, similar, not to the same extent. Airlines got some bailouts, cruise lines did not. But airlines as well took on debt. So you got to be really careful with the airlines as an investment. You got to look at the balance sheet. You got to look at the assets versus liabilities, because you don't want to get stuck holding an airline company, an airline stock that's going to have to dilute their share to cover their debt, to raise capital and all that. So off the top of my head, and I haven't looked at the sector in some time, but I've always been a fan in that sector of Southwest, ticker symbol LUV. They've always had the strongest balance sheet, and they're focused on domestic travel. And right now, with travel overseas and international travel being a little bit tampered because of the Delta variant and COVID still out there, Love is the best in the airlines, but I personally like Uber. And then another stock we're going to talk about. Let me take a look at the chat real quick. No one talks about Lyft. Yeah, no one does talk about Lyft. It's also a good play here. It's rebounded a little bit stronger than Uber. Just to see what the analysts say for Lyft. So Lyft is 72.77, 21% upside, and Uber has 47% upside. It might be because this guy's price target is so freaking high. But I mean, I don't think you can go wrong with either two of these companies. I think you can go wrong if you want to invest in Didi, the Chinese Uber. As you can see here, I mean, this has dipped so much. If you want to be risky with it, you can maybe hope for a swing back, but it's just not my cup of tea. I'd rather stick with Uber. So, Olaf, if you want to take a look at Uber, and that's what's always been the counter argument to Uber, is that they lose money over fist. But if you take a look at their valuation and the fundamentals of the company, it's always been because, well, before it was ride sharing, but that's portion of their business is now profitable. And then what was basically taking all their money away was Uber Eats. And last year changed things for Uber Eats. So if they can continue with that momentum on that side of the business, Uber will be profitable. And they're going to move their timeline up on profitability just because of how well Uber Eats has performed. But, you know, I think they're going to be profitable. I think it's going to be a good company. There is a risk with regulatory issues with Uber. But yeah, I think it's trending in the right direction, and it's going to move higher, in my personal opinion. I think Uber just for the next earnings in August, upside or downside at Uber earnings in August, what do you think? Well, I mean, it really depends on how big of a move we get into that earnings, because if we see a big move into earnings, then a lot of it's going to be priced into the stock, and earnings are going to have to be extremely good in order for it to move up higher. So it really depends on the move we get into earnings. So what I think heading into August, I think this is going to be a strong month for these stocks. They are going to move higher and then they will dip following earnings. But long term, I think they're going to continue up. You're going to see dips. That's the name of the game. And if you have high conviction in your long-term investments, that's when you step in and you say, wait a minute, let me buy some more on a sale. I'm going to be rich by doing this time and time again. So that's what I think with Uber. All right, so moving on, another reopening trade. And if you don't like the valuation for Uber, you're not going to like the valuation for this company. But I think we're going to have to pay up for it because it's just that good of a company. And that's Airbnb. And what the main thing that I want to talk about from a price standpoint for Airbnb right now. And I know when you take a look at, it's not a profitable company, so it doesn't have a PE, and the price to sales is like 25. So it's valued very, very high, and this thing could dip. So don't go heavy in Airbnb at this price. But basically, it opened up, I think, at $145. We're at $149.64 today. And now we are after the IPO. We've had 2 earnings with this company, and there's no more. We don't have a lockup anymore in Airbnb. So that risk is off the table, and I think this is a good price for Airbnb. And this company, when it comes to travel, I think dominates. And I think that Airbnb, from a valuation perspective, the valuation right now is high, but that's partly because of the pandemic, and the earnings that have been coming in do not account for the travel that we should expect in the future. So the earnings are a little bit skewed, but I'm not going to lie and say that this company's undervalued, because it's not. But it's one of those companies that might be deserving of a high valuation. And what I think Airbnb does as a company is, I think they are top notch. They completely dominate. And I think from a valuation perspective, they should be worth multiple hotel stocks. So if you combine Marriott with bookings.com, you combine a couple of those. I don't know how many right now, because their earnings you just can't go off of the numbers right now because of the pandemic. This company is going to be moving higher. This is going to take some time though. So I don't expect this to just move right on up, but this as a long term is a stock that I like. So tip ranks $171, 14.77% upside for Airbnb. That's not bad. That's not something that you're going to be like, oh, I want to jump in. But if you take a second, you step back and you think about that whole travel sector and what people are using. So Airbnb is not just where you're going to stay at night. That's a huge part of it. They give you exposure to places where hotels can't go. They give you additional options. So basically, if you want to stay anywhere in the world, you can use Airbnb. And if you're traveling with a family and you don't want to stay at a hotel and you want to have a kitchen and you don't want to have to pay up for a suite, or you don't want to do a big house on VRBO, you're not that big of a family, then you can use Airbnb. If you're traveling somewhere and you want to stay for a couple months, you can use Airbnb. But on top of that, it's not just where you're staying at night. Airbnb experiences can grow as well. And that's part of a business that I think is overlooked with Airbnb. Let's say you go to Italy and you want to go somewhere where they teach you to make pasta or some pizza, then you can use Airbnb experiences. This, I think, is overlooked when it comes to Airbnb, and I think that's another factor that we should consider in the valuation. But if you just take a look at this company and you sit back and you say, in 10 years from now, do I think Airbnb is going to grow and going to be a better company? And I personally do, and that's why I think it's a good long-term investment. Yeah, I mean, if you want to go somewhere and you want to have a place with a boat, you want to have a dock. You can't do that for a hotel. I mean, there are some hotels at the Keys that have that, but traditionally, most places that like on the lake or something, you're not going to get that. So Airbnb has been great. Now, if you've been day trading that a bit, I mean it's been a little bit volatile because it's been beaten up. So we had a 5% gain on the day. If we take a look at this in the 10-day, 30-minute, I mean, there are some days where it's been volatile. This can be traded if you want to do that. But long term, I think if you stick with it and you DCA, dollar cost average, you buy over time, just nibble here and there. It's expensive. One share a month or whatever, just a little bit by little bit, it can go on. And I am harping on Airbnb. Jeez. All right. Next stock. Next stock. All right. So we talked about the 10-year. I think the 10 years are going to rebound. And this might sound a little bit weird why I say Apple is a good stock to buy. Traditionally, Apple moves with the 10-year. So if the yield on the 10-year decreases, the share price of Apple moves up. If the 10-year increases, traditionally, the share price of Apple goes down. So I think the 10-year is going to increase. So traditionally, the share price of Apple would move down, moves inversely. But I think that's going to stop. And I think we are going to see strong strength in mega cap tech. You name it. Amazon, Apple, Microsoft, Google. I think they're all going to perform well based off the technicals and the momentum that they have. And once you get the ball rolling on mega cap tech stocks and they build momentum, it's a bull. It is so hard to stop. These stocks are so hard to stop the momentum on. And as you can see by the chart right now on Apple, we just broke all-time highs. And it's not likely for a stock. It's not usual for a stock to break all-time highs and then just be like, that's it, man. I just wanted to peek my head out there, tell you guys that I made all-time highs and then drop back down. Usually it's a bullish move. Usually it's a strong move and they come out there guns blazing and then you see the stock move up. That's what I think is going to happen to Apple. I think you're going to see $175, $200 in Apple stock by the end of the year. So I think that this stock, maybe not 200, that's a lot, but 175. So tech doesn't like inflate. Yeah, I mean, that's what I mean. Like when the 10-year moves up, 10-year tech usually drops, but I'm saying that the momentum is so strong. And also, like the 10-year moving up isn't just inflation. It's just a sign of economic growth. When the economy is strong, so the way the 10-year works is when you have more buyers, the yield decreases. So if a bond's out there at $100 and you get $1 every year, that's a 1% yield. If you pay more than $100, the yield's less than 1%. Say you pay $50 for that bond, then your yield is 2%. So if you have a lot of buyers in anything in life, that means you have a lot of demand. And supply, let's say it's fixed. So you increase the demand. So people are willing to pay more for something. So they're willing to pay more for bonds. So when you have a lot of buyers, the yield is going to be low because the price of the bond is going to be high. You're going to be paying more than $100, so yield is going to be less than 1%. Or that's just an example. When the economy is strong, people want to put their money in the market. People want to put their money elsewhere. They don't want to buy bonds, so you decrease the amount of buyers and the yields rise. When inflation is high and people think that they're not going to get their return, they're going to lose money to inflation on the 10-year, then you don't get those buyers and the yields rise. So yields rise because of two things, inflation or economic growth. When you see a strong economy, you're going to see yields increase. When you see a strong economy, inflation's always a worry because you're seeing strong growth and people are paying more for things than they did before. So it's kind of hand in hand, but you just got to keep inflation in check. And whether it's going to be in check or not, I do not know. I do not think a lot of this inflation is going to be transitory. So I am a little bit afraid of inflation as well. But I do think the economy is going to be strong along with it. And I hope that they stay in balance, but potentially they won't, and we'll see strong inflation. So I think Apple's moving higher. And then another stock before I get into the chat is Exxon Mobil. And why do I think Exxon Mobil? Let me pull up. Crude oil. OPEC. So if you don't know what's happening right now with OPEC, they had meetings 2 weeks ago. OPEC Plus was suggesting to increase production by 400,000 barrels a day and extend the deadline from April 2022, which is the current agreement, to December 2022, I believe. So extend it by a good, more than half a year. The reason being is with the Delta variant, they don't want to increase production by too much, and they want to have this production cut in place for longer just because of the uncertainty. So all parties with OPEC agreed on 400,000 barrels a day, but the UAE did not agree to the extension. And the way OPEC works is that all countries have to agree. They have to agree on a deal or there is no deal. So right now, we still have the current deal in place and they're not increasing production at all because they weren't able to agree on the deadline, the extension of the deadline. So when that news came out over the weekend, oil went soaring. And we're looking at the Brent because I can't pull up the WTI on Thinkorswim. So that's when we hit $77. That was over the weekend that news came out. OPEC was supposed, and this was the holiday weekend. So Monday was the day after July 4th. The markets were closed. So on Monday, they were supposed to meet and they were supposed to come to an agreement. They did not meet. They did not come to agreement. And the future price of Brent crude oil went soaring to $77.83. And that was the highest price in 6 years. And then FUD hit the market on Tuesday. And we saw a sell-off. We saw a huge one from $77 to $74. It bounced a little bit. And then we got discussions that Joe Biden wanted to talk to OPEC. He's worried that oil is moving too high, but he won't allow a pipeline. So he's worried about prices going too high, but he doesn't want to increase production here. So whatever. Then it dropped to $72. Nothing has changed, and based on there being no deal, there is no increase in production right now. And the fears that the UAE is going to break away from OPEC and do as they want when they agreed to 400,000 barrels a day increase, they're just not agreeing on the deadline, the extension. So right now we have a situation where they're not increasing production. The deadline, the deal's in place until April 2022. And if we do not see an increase in production soon by OPEC, demand, based on what I believe is going to be true with Uber and Airbnb, travel is going to be hot. People are going to be using gas. I think that oil is going to move higher. And if oil moves higher, and based on this chart, and there are a lot of futures traders out there trading contracts that they believe oil is going to hit $100 a barrel. And based on the technicals, remember how I said when we break a resistance or when we make all-time highs, we usually move higher and gap up? Well, we broke a resistance here and we had that OPEC meeting, we had FUD, but if we rebound, I think we're going to see $80, $85 a barrel. And that is when OPEC will then meet again and be like, shit, guys, we might need to increase production. and they're probably going to have to increase it by more than 400,000 barrels. Some analysts in this sector, some people that are pretty smart when it comes to this stuff, say that we need 2 million barrels a day to meet the demand. And as we see more economies reopen in Europe and other places in the country, demand's going to be stronger. So if we see Brent crude oil get to $80, $85 a barrel, oil stocks are going to move higher. And the one that I personally like is Exxon Mobil, because I think it's a strong company behind it. And we have seen a dip. So I'm buying the dip in Exxon Mobil. I think that this moves higher, and we are going to see it move higher. Now, the same thing, Exxon Mobil, we broke highs, yearly highs. And actually, I think it goes back to the 3-year. So we broke highs here, and we're moving up, and we're like in no man's zone right here. Where are we at in the chart? We don't have nowhere to go except up to $70. And that would be nice returns on this. So this is a little bit more of a risky trade. It's not an investment. I'm not trying to be an oil long term, but I'll swing this for the next 3-4 months and get to I think it's going to go over $70 and get my gains. I got options on it. And I got shares. That's how I'm playing Exxon Mobil. The Stock Explorer Oxy. This one moves a little bit more on crude oil. So this might be, it's cheaper too. So you can, if you're worried about the price, I mean, price isn't valuation. Don't worry about the share price. But let's say you don't have a lot of capital to work with and you want more shares. Oxy as well moves a lot with crude oil. Now, the reason why I pick Exxon and not Oxy is because Exxon, when I was in it, it broke its 1-year high. And Oxy did that recently on July 1st. But I've been on Exxon before July 1st. So this is bullish on Oxy. We broke the 1-year high. We dipped down. And same with XOM. We're going to move higher in my personal opinion. Is Polestar a good stock? Chewy. Oh, man, I love your name, Chewy, because I love Chewy stock. This is probably my favorite stock, but from the sector or from the whole theme, I didn't want to include this in this video. But if you guys know me, this is probably one of my biggest holding in Chewy. I'm not going to dive into it on this video, but just know that I like this stock a lot. Polestar, that's one of those EV stocks. Supposedly, it's in a SPAC, right? I don't know much about it, so I'm not going to talk about it. It's kind of like CCIV, but less popular. So let's dead inside and out. Always buy the dip. What about USO? Same thing with the oil. Anything energy. It goes into that whole strategy of, I think reopening is going to be strong. So my exposure to reopening, a lot of people play cruise lines, airline stocks. I don't do that. I'm playing Uber and Airbnb and energy. All about travel. That's the way that I'm playing it. So any oil stock, I think you're pretty good with. Any energy stock, I should say. As far as travel goes, I like Uber and Airbnb. Chewy. Yeah, that's right, baby. Chewy. Yo, I don't know why Chewy isn't a meme stock, because every time I talk about Chewy on the Discord, I put Chewbacca on. There's so many good gifts on Chewbacca. It should be a meme stock. And Chewy is at a good value. Companies growing revenues over, I think it was 47% year-over-year growth on revenue, and it's trading at a price to sales right now of 4, which is really good for a growth stock. And, they got a bunch of growth because of the pandemic, but it's not like people just bought pets during the pandemic and it's just going to kick them out the door, give them the boot. You're going to be feeding your pet every single day. And Chewy is going to be delivering you your foods, your goods, your toys all the time. And ask any mailman out there how many boxes of Chewy they deliver on a single day. Their backs are hurting because they've been carrying those heavy bags that people don't want to go to the store to buy. Who wants to go buy an 80-pound bag of dog food when you can get Joe Schmo at the USPS to drop it at your front door on a schedule? They keep their customers. Customer growth is great. The growing company, spending less on marketing. More is moving to the bottom line of the company. They had 3 profitable quarters back to back to back, and they are growing revenues, and their price to sales multiple is low. Don't get me started on Chewy. Chewy is going to be a great company. It's just not the thesis of this video. It's a growth stock. It's a mid-cap growth stock. And if we see the 10-year increase, there might be a dip in Chewy, and I would buy that dip. So I have very high conviction on Chewy long-term. My conviction, just because of how the markets might play out, is a little bit lower in Chewy. I can see it going down, but that's okay. I'll buy more. It is one of my largest holdings by far. I have Leaps and shares in Chewy. Leaps are call options. They're in the money. They expire January 2023. So I'll be holding them for a long time. And I think that this company is going to be more than $120 over the next couple years. Chewy. Nancy. Yo, so somebody tell me how we can see what stocks Nancy and Paul Pelosi are buying as soon as they buy them. Because whatever they touch, you know it's going up. They know what's happening on the inside. So, I mean, Pelosi family, give us a call. We would love to do business with you. Bark is a competitor. I'm only in one. So I think Chewy's the name. Chewy. Let me scroll up here. Alibaba, Olaf the Mighty. Yo, so I was in Alibaba. I am no longer in Alibaba. It was dead money. I was getting pissed off with the company. Well, not the company, the stock. And what's happening right now with Chinese tech stocks, it's an additional risk there. So I've always liked Alibaba because the company is great. When you compare it to Amazon, it's so undervalued. Similar businesses, but Alibaba trades at a multiple that is so much lower. So every ounce of my body says, buy Baba. But the conservative side in me with this whole, and the fact that Baba didn't burn me, but it's been dead money and I sold. It's just like, I don't want this anymore. I'm sick of the shit with Chinese stocks. Like, can the government just shut their damn mouth and let these businesses just grow? They step in the way all the time and it pisses me off and I just cannot deal with it. My stress level just goes through the roof when it comes to Chinese stocks. But from a valuation perspective, these things are undervalued. So technically it's a buy. Fundamentally, it's a buy. But the story with these Chinese tech stocks and the regulations and the Chinese government, I just can't get into it. Let me get some more. All right, CCIV, that was mentioned a couple times. If you guys do not know, CCIV is going to have their shareholder meeting on July 22nd, I believe. That is the time, the place that you want to be, and you want to select yes on the merger. So if you got shares, make sure you vote and you get this merger approved. Now, I haven't got my information from TD Ameritrade. I don't know what's on the agenda, and I'm going to let you guys know this now. Somebody mentioned on the Discord that there was something on the agenda to allow the maximum shares that they can potentially dilute with to be 15 billion shares. If you guys know any information on that where you can help me out, and also when you go to vote, say no to that. That's too many shares. Let me know. Comment on this video. If you're a part of the Discord, comment on the Discord. And if not, you can email me at weareinvesting.yt@gmail.com. Because what I think is going to happen with CCIV is if that doesn't become the story, if that doesn't become the topic of discussion that it got approved to allow them to dilute potentially 15 billion shares, which would absolutely destroy the valuation of the company. But I don't know exactly what's going on because I haven't got my information from TD Ameritrade. So I can't say that is exactly what's going on, but I got a screenshot from the proxy vote and that was something that you were supposed to vote on. TD hasn't sent it to me, so I can't confirm that, but it's worrisome. But regardless of that, if that doesn't control the story and that doesn't get approved, but the merger does get approved, I think that this is going to go up, because recently we have seen SPACs start to move off of mergers. Let's get it. Yo, what's going on? What's going on, 430 Castro? Que hola, Sere, que hola. What's going on? CCIV, if it has a merger, it's going to move up. Recently, that's what SPACs have been doing, and technically it has been moving nice off of this trend line. It's been moving higher. We broke a resistance. The next one is here at $33, and I think that a lot of people want to get into this name. Now, a lot of people got burned here massively. It's crazy what happened. And there is some bad blood in CCIV. So that whenever you see a stock move like this and then dump, now this is a pump and dump, essentially. That's what happened. Whenever you see a stock go through a pump and dump, which this company should not have had a pump and dump. It's a good company. It's legit. You introduce sellers into the market, into the stock, because they've been holding on to a stock, if they've been holding on to it, that they've had a loss on, and they're just looking to get out. They have a bad taste in their mouth. So as the stock moves up, when people start to break even, they start selling, and that's a resistance. So it's much harder to move up when you see this kind of move. Now, what happened here with CCIV is kind of twofold. It was buy the rumor, sell the news. The rumor came out. People didn't freaking understand the valuation. The fact that CCIV is a pipe at $15 a share and not $10 a share. And they were too idiotic to realize that the valuation was fine. And it's exactly what the rumors were saying. So people had a, oh my God, their valuation is too high for CCIV. I got to sell. That's what they did. You see a huge drop, and it just could never regain strength. And what I did, if I got in, as soon as I found out that Lucid Motors was going public during the whole EV craze, I bought shares. I think, at $14. So I actually was able to get in before the pipe, because this thing opened up at 10. We had rumors, and I bought like right here, $14. I notified the Patreon. People got in. I held. I had call options. I sold my call options moving up. So I made money on the stock. But then the stock dropped. And right around here at $30, I said, this is crazy. I was too smart for my own good. I understood the merger. I understood the value. I understood that the pipe came in at 15 and not 10, and that's good for the stock. The higher the pipe pays, that means you are closer to private investment in public equities. These are big time players. They bought in when you bought in. I actually got in before them, which was crazy to think that I was able to buy this company for cheaper than what Chamath would have to pay for it. But anyways, people didn't understand that. I thought people would understand that. They did not. So I bought at $30, and now I'm negative on the stock, but I'm holding long term. So yes, David, they are holding an investor call on July 13th. I will definitely be tuning in. I think it's at 4:30 p.m. Eastern time. So I'm usually still at work at that time, but I can tune in on the computer, and I'm going to listen. And that 15 billion shares, that's what's on my mind. I want to know more about that. Leading into the merger, CCIV can move higher. I think the stock will move higher longer term. And if you're going to get into an EV like a sole EV play, I like Churchill Capital. I like Lucid Motors because everything's in-house. They're trying to be like Tesla. They're trying to do everything in-house, where some of these other companies, they have a lot of stuff that's done outside. So I do like that company. So I don't know how long I've been streaming now. It's 8:34. I'll let you guys know another EV play that I like is Ford. I'm in it. It's another big holding of mine. I think Ford's going to move much higher. And why I like Ford, essentially in a nutshell, is I own a Ford. I own an F-150. I like the truck. But every EV stock kind of needs its thing. Every company kind of needs its thing. NIO is EV in China. That's their thing. Tesla, first to market. They also have solar panels. They're Tesla. That's their thing. What's going to be Ford's thing? What's going to separate Ford from its competitors? If you look at what happened with other stocks, Nikola and Lordstown Motor, both of those moved up because of their pickup truck. The Nikola Badger and the Lordstown Endurance. People wanted to invest in an electric pickup truck because the pickup truck market is huge. Well, now we know the Badger is no longer a thing, and most likely the Lordstown Endurance, based off of everything that's happened with the company, isn't going to be a thing either. So what does that leave you right now moving forward with EV pickups? You have the F-150 Lightning and the Tesla Cybertruck. Now, when you take a look at the Cybertruck, that John is super flamboyant. You go to the job site on a Cybertruck, you might as well be wearing pink boots because they're going to laugh at you. That is not a vehicle you take to the Cybertruck. Those men will tear you to shreds if you go to a job site in a Cybertruck. It's a cool truck, but it's not a truck you take to the work site. You don't want that kind of attention on you when you go to the job site. So what is it for the working man, for fleets? What does that leave you with? It leaves you with the F-150 Lightning until something else comes out. And they are going to dominate the truck market. And right now, the company, Ford, overall, is not valued as an EV play. It still has so much room to run that it can move way higher. That's what I think about Ford. It's going to smash the game. That is right. Nobody is messing with this F-150. I'm going to buy an F-150 Lightning if I can get my hands on it. Kevin O'Leary, Mr. Wonderful, was on CNBC on Thursday or Friday. And he was like, yo, Ford, I'm going to promote the F-150 for you. I'll do video reviews on the product for you, and I will pay full retail price for an F-150. Can you please let me buy one? And Ford was like, I'm sorry, they're all sold out. You can't get any. So the demand is super high for the F-150. It's going to rock the game. That's damn right it is. To the moon. To the moon. F-150 to the moon. CCIV is going to do well. Space to the moon. I'll catch you guys. I'm going to wrap it up. It's 8:37. It's probably been close to an hour. I started this at 7:45. I appreciate you guys for joining in. Much love. I love the support. Smash that like button. Join the Patreon. Get you access to that Discord server. I plan to do these. I'm going to try to do them every Sunday. And I'll try to do some shorter lives during the week. I'm going to get that Elgato cam link so I won't be lagging. And the video is going to be much better quality because I got a nice camera. I got a Sony ZV-1. Paid top dollar for it, but I don't have the freaking capture card. So we'll see you guys later. Reach out to me on the Discord if you got other stocks that we'll take a look at, but that wraps it up. I hope you guys enjoy the rest of your weekend. I hope you guys have a great week. I hope it's a prosperous week, and I hope that you are able to continue on your investment journey. Just remember that this is a long-term game. This is something that you're going to be doing over a long timeline. So do not get too frustrated with the day-to-day and just think bigger picture. Think, where am I going to be 10, 15, 20 years down the road from now? And if I continue just being, a steady investor and I continue to do my thing, you will be making money and you will be very thankful that you continued investing in the long run. So just stick with it. The earlier, the better, and just do your thing. I'll catch you guys on the flip side. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together, we are invincible. Dale, mi gente.